Microsoft and Alphabet are benefiting from the rising effectiveness of artificial intelligence. Alphabet has created its own AI model called Gemini. Microsoft, with its investment in OpenAI and ChatGPT, is incorporating that into its full product suite. But which one is the better AI stock to buy today? I'll answer that question in this video. I'm going to compare these two AI stocks on several critical financial metrics, including revenue, cash flow, operating profit, return on invested capital, the forward 5-year expectations on earnings per share, and compare it all against their valuations to determine which one is the better AI stock to buy now. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with revenue growth, you'll notice that Alphabet has had the slight advantage against Microsoft on revenue growth over the last decade, although that gap is narrow. Looking ahead over the next 5 years, I suspect Alphabet will exceed Microsoft in revenue growth in that time. The reason I suspect this to be the case is because Alphabet has several market categories that are growing very quickly, especially its cloud segment that's growing much faster than its business overall. Microsoft as well has solid growth expectations over the next 5 and 10-year periods as the end markets it operates in are also growing, including the PC computing industry, which is entering its replacement cycle right as we speak. Microsoft also has its own cloud computing segment that is doing extremely well. And Microsoft is also entering into the gaming segment with its purchase of Activision, and now the company has a broad suite of products it's offering as well. Although Microsoft's end markets are not growing as quickly as Alphabet's end markets. Looking at the operating profit margin, you'll notice Microsoft has a significant advantage in this metric. Its operating profit margin is an excellent 44.64% compared to Alphabet at 29.83%. Microsoft has been much better at controlling costs while its revenue has grown, while Alphabet has not really spent much time on cost controls, except in late 2022 and early 2023 when it finally announced job cuts and cost-cutting efforts, trimming down over 10,000 jobs. I suspect those improvements will help Alphabet's profit margin in the next 5 years. Still, I suspect Microsoft's operating profit margin will be better than Alphabet going forward. Looking at the cash flow from operations to sales, it's a similar story here with Microsoft well ahead of Alphabet at 48.36% compared to 32% for Alphabet. The difference between cash flow from operations and operating profit are non-cash expenses, things like stock-based compensation and depreciation and amortization. And that's the only difference. That's the main difference between the two metrics. Looking ahead, the analysts on Wall Street that are following Alphabet stock expect it will grow its earnings per share by 20.5% over the next 5 years. Now remember, when Wall Street analysts are making these predictions, you have to understand that nobody knows what's going to happen in the future and nothing is for certain. This is just a forecast. Sometimes they are correct and sometimes they are not. And so you have to remember that when you're looking at these forecasts. However, for the majority of cases, the earnings per share and the forecasts are generally around the range of where Wall Street analysts have forecast, especially over the short term, things like 6-month and 12-month periods. It gets a lot more difficult and challenging to forecast 5 years ahead, but generally speaking, the comparisons are relatively accurate. Those same analysts that are following Microsoft stock expect it will grow its earnings per share by 14.6% over the next 5 years. Again, the same is true with these forecasts as well. But when you compare the two, you'll notice the analysts on Wall Street expect 14.6% for Microsoft and 20.5% for Alphabet. That's enough of a difference to determine that Alphabet is likely to grow its earnings per share faster than Microsoft over the next 5 years. Now, will it be precisely this magnitude that are forecast by Wall Street analysts? Probably not, but it's very likely that Alphabet will grow its earnings per share faster than Microsoft, given that the difference in forecasts are large enough to make that distinction. The return on invested capital measures how good a company is at taking investor capital, spending money on research and development, buying long-term assets like manufacturing facilities, investing in data centers, etc., and then turning those investments into profits. That's the core of what shareholders want from a company's management team. And so, given the importance of this metric, you'll notice that Microsoft and Alphabet are very close, and Alphabet has been closing the gap here very quickly, and they've both been improving over the last decade. Alphabet holds the slight advantage here at 29.68% compared to Microsoft at 29.44%. They've both grown their return on invested capital metric very well over the last decade, as you can see here. And finally, I wanted to compare the two on valuation, and the metric I chose to use, since they're both sustainably profitable and have been so for the better part of the last decade, is the forward price to earnings ratio. According to this metric, Microsoft stock is trading at a roughly 50% premium to Alphabet. Microsoft is trading at a forward PE of 27.21, whereas Alphabet is trading at a forward PE of 18.53. Alphabet stock recent headlines, given the DOJ and the antitrust lawsuit, has brought down Alphabet's valuation even further. I recently did a video evaluating the impact to Alphabet stock investors from that antitrust case, and my conclusion is that it's not a net negative for investors, because if Alphabet has to break up its business, the sum of those parts of the business that it sells off will bring in more value to shareholders than they have in owning all those businesses altogether. So for that reason, I don't view that as a major risk for Alphabet stock investors. So given what we looked at, given that Alphabet's earnings per share expectations are better over the next 5 years, and given that Alphabet's return on invested capital is slightly better than Microsoft, and given that the revenue growth are very similar, the only areas where Microsoft had the advantage were in profit margins and cash flow from operations to sales. However, I don't think Microsoft's advantage in those two metrics offset the other metrics enough to demand a 50% premium over Alphabet stock. A slight premium, sure, if Microsoft was selling at a forward price to earnings of 20, maybe 22, maybe 22 and a half, I would say Microsoft would be the better buy. But according to these valuations and the metrics that I've considered for these two companies, if I had to pick between these two, I would pick Alphabet. However, I will say that they're both excellent companies, and I have both rated as a buy. I have Microsoft stock rated as a buy as well. I think it's an incredible company, as we just saw here, but I just think Alphabet is a little bit better than Microsoft, given the valuation difference and given the outlook over the next 5 years. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.